Okay, Barbara, we've been kind of chopping sideways for the last couple of weeks. What gets us, moving in one direction or the other?
Well, the market, as we know, has had a huge run this year. S&P up 10%, up 25% since last October. So it's either the Fed cuts rates, and we've talked about that, and I think, David's right. There's, some question about whether it's going to be 3 or 2, but, the rates cuts will come, or the other one is earnings. And I think it's where the focus is on earnings. You've certainly seen since the beginning of the year when expectations were for 6 to 7 cuts, the market has absorbed the reality that at most it'll likely be 3 and could even be 2. And so I think that earnings season starts next week again with the big banks, JP Morgan, Citi, Wells Fargo. And then after that, and we're going to hear a lot about earnings and company guidance and that, because the fourth quarter was actually pretty strong. Guidance was mixed depending on the sector. But right now, the earnings estimate, the S&P average on the street is about 9 to 10%. So we'll see how this earnings does. But I think that could kick us off again.